Good morning, Jeffrey Friedman, Senior Commodity Broker, RJO Futures, here December 10th with morning comments, stock index futures. I always give you the word of the day or a phrase of the day. I'm going to say for today, Italy. For the week, I'm going to say the Federal Reserve announcement on interest rates and a stimulus program, maybe an increase, and we'll get to that in a minute. And for the month, I'd have to say Washington, D.C. So we'll start off with the day. Italy resigning of one of the key figures for the Eurozone, and that was a disappointment. Overnight, stock index futures around the world brought down. We were down about 3 to 4 in the S&P December future contract. Now we're unchanged. That puts us around 1414. We'll get into the technicals in a minute. So that's the word of the day. The word for the week is the Federal Reserve has a 2-day meeting, starts tomorrow, ends Wednesday, 11:30 Central Time. They'll make an announcement at 1 o'clock Central Time p.m. There'll be a forecast from them, and then at 1:15 will be a press conference with questions and answers telling us what's going on. Now, to review that very quickly, remember we are at an open-end situation, $40 billion a month, buying back bonds, okay? Keeping interest rates low, buying program, keeping price high, and the yield and price work, opposite. So by them buying, they keep yields low to stimulate the economy in whatever people do when borrowing. Mortgages, overnight rates, whatever it is. Now, have said that, the chit chat is that they're going to increase this open end, meaning open end, you can go 8 months, 12 months, 18 months, okay? Whatever it takes. What they're talking about is increasing from 40 billion, maybe even 50 billion, 80 billion, and maybe not. Maybe they won't do anything, but that's the chit chat. And obviously a lot of people are talking about that would encourage more inflation, and obviously the stock market kind of likes it. But right now it's focusing on Italy for today. We're not breaking because we're kind of looking forward to Wednesday. For the month, we still have the cliff, and we don't want to fall off because most analysts have said that higher rates for taxes and cutting programs, a pullback of government spending through whatever programs they have, would put us in a maybe severe recession. So no one wants that. We'll see if the Republicans and the Democrats can get together and compromise, do something for the country versus something for the party. Okay, everybody wants to posture, and I'm hoping that it doesn't get out of control. So those are your three things. Let's take a look at the technicals. We'll look at the S&P very quickly. I can't go through all three in this short time span. We're unchanged at the moment. We've had a kind of a small rally short term. We're in an uptrend short term. Your parameters, in my opinion, would be 1440 on the upside. We're at 1414. So maybe, 30 points to the upside. Resistance, minor resistance getting to that level would be 19 and 24, 14 being your handle in the December contract. On the way down, probably 1400, 1401, and then of course 1390. So 1390, 1440 is your range. A breakout either way would give you direction long term. We might get that from the Federal Reserve, and we might get that from Washington, D.C. We are not going to get that, in my opinion, from Italy or Europe at the moment. Now, have said all that, remember, we're talking the December contract. This is rollover week into March on the Dow, the NASDAQ, the Russell, and the S&P. So it's rollover time. You should be calling me anytime you want. We can talk about any markets you want. I can help you with a rollover. I can help you analyze short-term, long-term, fundamental, or technical. Now, have said all that, and don't forget option strategies. with futures or even by themselves. Remember always, trading futures or option to futures involves risk of loss, not suitable for everyone. Please give me a call. Good luck and good trade.